Hey everyone, welcome to What's Happening in Real Estate this week. I've got Conrad Zerini with REMAX Escarpment and REMAX Niagara, broker, owner of both those brokerages. And we got Brian Hogman right beside me here at Mission 35 Mortgages. We're going to talk about what is going on with the interest rates. The Bank of Canada says it's not seeing decline in house prices as it had expected. Brian, I mean, you're the mortgage guru or mortgage guy. What's going on? What's and Conrad, why is it not? It's not working.
Well, I think everything's a lagging effect. We saw the Bank of Canada pause the rates. The narrative came out saying, you know, we're going to still look at it. We're still going to look at it a little bit later, but I think that's what they have to say. I think we've really seen the peak. We've seen rates rise more so, we were talking about it earlier, than even in the 90s. The actual percentage point increase that we've seen overall in the short period of time has been so much. And with hundreds of thousands of mortgages coming up for renewal all the time, that lagging effect, I think the Bank of Canada realizes it's hampering retail spending. It's hampering the markets. It's hampering a lot of things. So I think we're finally at the peak. And actually, I will wager that we're going to see the interest rates come down sooner than people think. Because I remember they were saying interest rates were going to stay lower for longer back in 2021, 2020. Remember that? They didn't. People said they were going to stay higher for longer. I personally don't think that they will either. So.
Oh, interesting. That's a good comment. Yeah. Well, you know, the funny thing is, you think about it, where are they getting their data? You know, today, if you look at Toronto right now, semi-detached is up 4.9% over last year. Detached is up 5.2%. Townhouses are up 4.5% over last year. And the only thing that's down is condos, down about 3.3%. But I like, you know, I'm doing a deeper dive and look at the granular numbers. They look at what's in that bundle of the CPI. They look at what is, you know, what percentage is 5% or more. Well, that's down to about 37%. Okay. They want to get that down to 14%. Back a year ago, that bundle that was 5% or more, like, you know, different products, was 66% was 5% or more. So they have done something to compress inflation, but I think they definitely thought they would have seen something in housing. But you know, the demand seems to outstrip it, and people are hanging on, and they're not going to let their properties go for much lower. We had that correction, and I think we've hit the trough. My prediction is the trough. This is the trough, and anything from here is up. So this is the opportunity if you're really thinking of buying.
Well, I was just going to say on that too. You mentioned the CPI. It's very interesting. The Bank of Canada's target was 2%. The number was 3.8, but if you back out the interest rate costs, you're actually at 2. We are actually where the Bank of Canada wanted us. So those inflationary numbers could be worse than what we actually think they are.
Definitely.
It's just, you know, the one thing is, if you've been, Conrad, you've been noticing this, the numbers have been floating up and down throughout the year. Like, you know, it's a month. So, and I predicted that. I predicted the average sale price is going to bounce up and down throughout the year. And I do think there's a little bit of an opportunity for buyers to come in at the end of this year if the inventory is there. Now, but I do predict that it will climb. And in February, March, we're going to see a strong market. And then I think it's going to bounce a little bit through probably the first half of 2024, and then I predict the fall we're going to start seeing people jumping in and saying, okay, let's go, especially with the interest rates maybe coming down a quarter point, maybe middle to the end of next year, possibly. Who knows?
I think we're definitely going to see it by the end of Q2. I think based on where we are and where things are at in the marketplace, I think that's going to happen. Could it happen sooner? I do think so. I think when we see retail spending come in light, probably from Christmas this year, when we see the numbers come in January, 3rd week, 4th week of January, most depressing week of the year for so many reasons, Christmas bills and New Year's resolutions, all gone, all in. Yeah. I think you might see them at the end of Q1. I really do.
Yeah. So, and don't get confused by the U.S. numbers. I think everybody's getting confused by the U.S. numbers. That economy's chugging along. 80% have 4% or below. They ain't moving. They've got cash, and they still got savings. It's the most wealthiest time for Americans in American history. They're outspending, but Canadians a whole different story. So that's the other thing to remember.
And right? I think for mortgage rates, just on that, because in the American economy, you got 10-year rates. You don't touch it. You don't have these 2-3-year terms that we do.
Too bad we didn't have those.
Yeah, everything is almost everything down there is like a 10-year term. So they locked in at 2%, 3%, 4%. You're right. They don't care. They're out spending money still.
Oh, that's it.
Yeah.
Now, if guy that's somebody that's obviously, like you said, there's 100,000 mortgages being renewed every month, I guess, coming up. So if your mortgage is being renewed right now, Brian, would you just go on variable for maybe 6 months to a year and then lock in, or do you lock like what like I'm thinking I have to paint it out. I have to tough it out for the next 6 to 8 months, maybe 9 months before the interest rates maybe start coming down. I don't know. Like, it's tough. Everybody's asking that question.
So I think it all depends, first and foremost, your goals. Is it a house that you're going to stay in for the next 3, 4, 5 years, and on your affordability, right? If you are well within your budget and you like to gamble, I like to say, then yeah, you could take a variable. But remember this, variable rate mortgages with the banks are in the 7.2%. If they come down 2%, that brings you down to 5.2, right? 5-year fixed money, because if we get we had the pause, and if the bond yields start to fall a little bit, 5-year money is going to be in the 5s. So what I would say is like that, just don't be confused that 5-year fixed rate is not going to drop at 2 points either. The variable is probably going to come down 2, and the 5-year fix is probably going to hover within maybe a quarter, half a point. So with that being said, like 5-6 months ago, we saw a 5-year fixed rate at 4.8, 4.9. Hallelujah. I'd lock in at that all day long today.
Yeah.
And if we see those 5-year rates go down over the next 30, 60 days, because that's a forward-looking rate, then yeah, I would lock into a 5-year as well too.
No, that's brilliant, Brian. And I predicted by the end of the year, we'll probably see a 1/4 point decrease in long-term rates, bar none, just by looking at the bond market right now. 100%. That's brilliant. Brilliant advice.
So one other thing, Toronto has a plan that they want to build 65,000 affordable housing units, hinges on billions in provincial federal funding. So they got 5 properties allocated that they would like to do this. So now this is them basically buying these properties and contracting, and if I'm right, contracting out to build apartments. What are the chances of that actually happening, or is it just blowing smoke?
Well, that's a great question. Well, the thing is, look, there's been a lot of money flowing into rental housing. It's something I predicted for a long, long time. And you've got developers that have positioned themselves, even commercial developers that have positioned themselves to do more mixed development with high rise. The chances of these guys, these constructors, doing it for the city of Burlington, it could be a very challenging time, because they're going to flow to the private sector if they're already, in the business. Now, yes, they did work with Daniels when they did Regent Park, and they had various developers and builders in there. It's going to be a very interesting thing. And the other thing too is, like, if a regular builder builds at maybe, like, let's say $500,000 a door, including land, I hate to see what they're going to be charging the municipalities. Back in the day when low-income housing in the 90s, the province was paying like a lot more money to construct units than the private sector. So a lot of that money flowed there. Are these municipalities going to get the most bang for their buck, or they're not? And if, the money talks, if they do pay that much more, they might leave the private sector and start building with them. So it's, we got trades issues. We got still a lot of issues and still plaguing us yet. So that's a long road ahead.
Wow. Okay, one last thing here. Smithville woman says using cash for houses, the company was a costly mistake. So those flyers you get in the mail, those, buy your house for cash and all that kind of stuff. Now, this lady, she went with this program. She thought she was going to get cash. She didn't want to deal with, people going through her house and all that kind of stuff. And they gave her a $7,500 deposit. The guy says, okay, sign here, boom, boom, boom. She signs it. She thinks, she agreed on the price. And then basically he puts the house on MLS for about, I think, $60,000 to $80,000 more. It sells, and basically she lost out. Now, why would she do that, where you can actually call a realtor, call us especially, and call us, and we could have had that house, we could have held offers, or we could have put that at the right price, sold within a week, and she would have got top dollar. She would not have lost $60,000 to $80,000. Now, I don't get it. Like, what like what is
I
it?
think it's the fear and the urgency, right? I think a lot of people end up thinking that if I'm going to it's that get money fast. We see it in the mortgage market as well too, and we see a lot of mortgage brokers take advantage of people for this get money fast, right? And I think that's the hook that people see.
This concept is huge in the United States. It's big. I mean, like they have franchises you can buy for this, and they buy the house, flip it, and then they end up reselling it and stuff like that. But it's sad to see this Smithville lady. This is close call, but there's a lot of them. I've been asked to go on a house where the guy bought it for cash, and he wants to now flip it, not do a single thing to it. Probably make a lift of maybe 50 to 100 grand. And I just can't believe some people will actually let go of the houses that cheap. You know what I mean? Like it's just
it's like selling your own car, right? Like, you know what I mean? How many people like to go through the burden of selling their own car? They'll trade it in, or they'll figure out anything else. And it's beholden upon, us as realtors. And I know the Golfi team has a stress-free, headache-free type environment. I think we have to get that message out to people like that. Listen, we can make this journey as stress-free and headache-free and positive as we can, and get you the most amount of money in the least amount of time. So yeah, I think that message has to get out. I think just people are looking at that easy way out, right? You know what I mean? And they're seeing the markets lagging, and they're saying, well, I'd rather have my money quickly. It's beholden upon us to, like I always say, price with precision pricing. Let's look at all the market factors before we put a number out there. In terms of a list price. And and I think if consumers understand what we're talking about and where those numbers lie, then they'll price with precision, and they'll sell their home a lot quicker and make more money than the cash for houses, for sure.
And those guys aren't regulated either.
No, they have no accountability,
no,
right? Do they have any recourse to go over that after that person?
Not at all.
No, they signed a contract. That's like any other contract. If they were not smart enough to have it, a lawyer look at it or somebody else, and they sign on it, they're done.
And that's the deal. If it's too good to be true, it probably is, right?
Yes.
Like it's
yeah. Well, this lady thought she was getting like all the money at the time that she sold it, but she only got $7,500 deposit, and that was it. Like here's 75, here's 7,500. And then we're gonna close in 3 months or 4 months.
And then they actually put the house up for sale. And then people actually go through the house.
They list it with another with an agent, and actually, I think the agent they listed with was the wife of the guy that has this cash for thing. So there's a little bit of unscrupulous things going on there. So already.
Yeah.
So, but anyway, otherwise, you just got to be careful. But anyway, Any other updates going on with the market, Conrad? Like I know you're prepping for your video that you're
we're seeing you know what, it's funny, like you were saying before, it's week to week. We saw a surge in appointments and a surge in sales over the last week, which was very, very impressive. There's a lot of things changing in the market. We have that new thing, TRESA, which is the trust in real estate, which starts December 1st, and the way we're going to, buyers and sellers and some of the documentation. So that's coming down the pipe. And I was just at an AI conference, and there's some really cool things coming in terms of search that people will be able to, take a photo of a house they like and give it to their realtor, and the realtor will put it in a database, and it'll spit up all those homes that look exactly like that. And so we're going to have some, and the other thing is we're going to start to know if people like homes with white kitchens versus dark kitchens, and there's some real great data coming down the pipe. So again, to serve the buyers and sellers and give them the data that they really, really need, and to help them make effective decisions. So it's an exciting time to be in real estate. Absolutely.
This AI
I love
stuff.
it. I love
my God.
Yeah.
I love
you can focus on the conversations with the people and have all the information at your fingertips.
You should have seen.
Absolutely.
So I was at the awards for Chiba, and I had to come up with a bio of myself. I can't believe how good of a job that the AI did for me
to do my profile.
I put in everything. I'm like, oh my God, this is me.
Great idea.
That's amazing.
It was good. It was good. Anyway, guys, thank you so much, and thanks for listening. And we'll catch you next week on what's happening this week in real estate.
Thanks.
Absolutely.